All right, what's going on, Tycoon? Super excited for today's video. We're going to look at three stocks that I think you guys should be paying attention to. Okay, the first one's going to be Disney, DIS, and the next one is going to be Peloton, PTON, and then the last one is going to be affirm. All right, so we're going to look at Disney right now. I just dropped a video yesterday on Disney showing you guys the gaps. Okay, now we had call options on Disney in the Options Trading Tycoons Discord, and those are going to open up very, very well in the money. Okay, and for a very good profit. So essentially what happened is they had earnings and then they shot up from 145 up to 162, right? Now what we're going to do is we're going to monitor this and see if the market holds up, right? Most likely the best thing to do is going to be sell these call options at open, but there's this big juicy blue gap up above, right, that we have to fill. And if the momentum continues, right, because this was in after hours, so not a lot of retail traders were getting into this, right? So when market opens, it'll be really interesting to see if this falls back down or we fill up into that gap fill up above all the way up to like 175, 180. Yeah, right here, 174. Okay, so Disney, super big, ran up really big. Lots of call options are going to be up hundreds, if not thousands of percent. Let's go ahead and take a look at Peloton. Okay, PTON. Now PTON has a little bit of some bearish divergence going on, right? And also I have the bullish, and the bullish price target is going to be this green line right here. Our blue line is going to be our breakout level. The yellow line is our base support, and then the red line is our bearish price level. Okay, so basically what this means is that we're going to look, and right now we're sitting in between our base support and our breakout level. So we may trade sideways, consolidate in between these periods, but once we either break 35.78 as support and we start trading below there, then we have a possibility of heading down to 31.4, and there's also a gap fill down to $25. Okay, so gaps, I really like playing the gaps. If you guys watch a lot of my videos, you'll notice that I'm charting up many of the gaps on the daily chart and the 1 hour chart and things like that. So that's a daily gap down, pretty interesting. There is a relatively cheap put option you can debit spread that I'm in full transparency, right? I have a Peloton short going, and then we had Disney long. So Peloton, I'm looking to see, basically I have this trade right here. I have the March 18th puts. Okay, so I got March. It's got some time, right? It's got like a month out on the expiration date. So time to readjust, things like that if the play does not go accordingly. But it's I mean it's honestly pretty cheap. You buy the 30 puts, okay, and then you would sell the 25 puts right here. Boom. All right, so if we buy one of these debit spreads, okay, it's going to cost you about $80, and the max profit is 420. Okay, 421. So really good returns there. If PTON does end up filling down this gap to 25 over the next month, that'll be a very nice return on the play. And if we fall down and we hit these and we break the support line, and we come down towards this bearish price target of 31.4, then I may take some profits on that play. You don't really have to hold them until expiration or anything like that. There's nothing wrong with taking profit on a play, even if it has like 400% profit, right? If you take profit at 50%, you're still doing better than most retail traders in general, right? And the last one we're going to look at, okay, is going to be affirm. Now affirm, I have the same thing charted up. All right, we have our blue line is our bullish breakout, our green line is our bullish price target, the yellow line is our base support, and then the red line is our bearish price target. Okay, now to me, there's also some bearish divergence going on in this one, even on small time frames. If we take a look, let's just go from like right here. Okay, so we got this spike up, and the notice if you the price, so basically the price of the stock is going up, and then the RSI is going down, has a downtrend line. Okay, if you notice that, it's heading down now. It dropped pretty hard on the 5-minute chart right there, which is, a result of that bearish divergence. Okay, so bearish divergences and bullish divergence are really, really helpful and useful. I got a tutorial in the top right hand corner for you guys to watch. But basically, with a firm, what I'm looking at, okay, is it's had this recent rally. All right. And I played a firm a lot. Every time it went below $50, it recovered like super, super hard. So plenty of quick trades there on a firm that I was able to get like 100% on. But yeah, so I mean, if we look, it rallied up from its lows 48.17 up to those highs is a 61% return. So this thing has ran up really, really big. Now, when things run up hard, they tend to pull back hard too. So that's what I'm going to be looking for to see if a firm can keep this momentum. It's got earnings today after hours. So that's going to be really interesting, right? How is that going to affect the company? What is that going to do to their stock price, et cetera? So, earnings plays are always really risky. And, it'll be interesting to see, does a firm fall down and catch support here? And then after hours, do we rally and break the breakout target and hit the bullish price target, or does a firm break this base support and hit the bearish price target, possibly even lower? All right, so keep an eye on these three stocks. Keep an eye on all of those price target levels that I gave you guys. Thanks again for watching. Don't forget to like, comment, and subscribe. And if you made it this far, then go ahead and watch this video right here because I really think you'll like that one next.